the market analysis, the post-market analysis for October 14th. I'm traveling, that's why it's not at its usual time. And hopefully you still get this video in time in order to help you guys out. So what happened in the S&P? As you can see, we broke out higher. We were trading in this tight box range, and we sort of tried to move above it last week. But this week, Monday at the open on a holiday, no less, we broke open. So the market was not on holiday, but actually the bond market was. So equities still traded, equity options still traded, but the bond markets were closed. And so you can see that we've got a little bit of low volume right here. So the last couple of moves up were on lower volume today without the participation of the bond market. And we did move up to as high as 585.27. So the question is, where do we go from here? I was talking about the last few weeks how it's going to be difficult to move above that 580 level because of the gamma structure that was in place and for various other reasons. And here we are, we're at 584.32. So does all of that go out the window, or do we need to reevaluate and look for potentially even more new highs? Well, we're going to break everything apart and take a look. So this market is starting to look a little bit parabolic. So if there is a big rush in tomorrow, then yeah, it's possible that we can start moving higher. Now, one thing to remember though is that this happened on low volume and it happened without the participation of the bond market. Once the bond market opens back up tomorrow, that's going to be a guiding light for the equities market. So currency markets drive bond markets drive equity markets. And it really does, the equity markets really do take their cue from the bond markets. So we want to look at that very carefully, see what happens when the bond traders come in. But technically, this does look very strong, very bullish, parabolic. That might signal the end or close to the end. But there could be, if we just look at a pure technical basis, there could be another 1 or 2 days of upside before we start to see a mean reversion or a pullback. So we want to see what we can tell from before we get to that point and see if we can say, oh, is it going to go a couple more days, or are we going to go flat, or are we going to pull back? So let's see if we can find anything that can clue us into that. So VIX came back down below 20, which is pretty good, especially since now every single option that they use to calculate the VIX is now pricing in the election. So the fact that this VIX is coming down is kind of a bullish sign. That's a pretty good sign. Now let's take a look at our CPC. CPC is down here at 0.67, and that's where the trouble starts to come in. Remember last Monday when I told you guys, hey, look out, the CPC is kind of low here, and normally that signals a pullback. Well, they were getting the exact same thing right here, and it doesn't mean it has to be a steep pullback. It's just a pullback. So we got that over here and we kind of pulled back. So that signal did work out. It was a baby pullback, 1 day pullback. Well, we're getting the same signal. Maybe it'll only last for 1 day, but we'll see. So it seems like it's going to be a little bit more difficult for this market so far from what we see for it to continue to rise higher, at least with impunity. So it's going to be kind of limited to the upside. The other really interesting thing that happened in the S&P was that we got a very different change in the S&P's gamma structure. Before, we had a series of large bars all the way out to 600, so that it seemed like that if we broke above the 580, that we could really start running all the way up to 600. Well, that gamma structure has completely changed, as you can see. There now we have a very large bar at this 584 strike, a reasonably large bar at the 585, but everything else is quite small. So this is a very different story than what we were seeing a couple weeks ago, all the way up into Friday, actually. So if this continues, then it's more likely that we will bounce back down off of this, or that will pin to this 584 level. So that's telling us that at least in the very short term, it seems like the upside is quite limited, maybe just up to 585. That's not that much more, and we actually already hit that level today. So the CPC combined with the gamma structure that is currently in the S&P markets is telling us that we're going to have a little bit of a hard time. But next week, after we get or actually this Friday, what happens is we get the monthly expirations. So once we get monthly expirations, that's a lot that could get removed from the market or has to roll. And once we see that roll, we get to see where the gamma exposure shifts to, and we will be able to reevaluate. But for this week, it looks like it's kind of limited. Technically, I would never say that. It's looking great. It's looking very strong. These just beginning to have a parabolic move, that type of situation generally results in increased movement. But the CPC and the gamma structure are both telling me that, hey, maybe not this time. And the fact that we're on low volume and the bond market was closed is telling me the same thing. Now, there's also one more thing that we want to consider. So right now, what did I tell you a little bit earlier? The bond market will lead the equities markets. So what does the bond market tell me? The bond market, TLT, keeps on dropping. This is just ever since that rate cut decision by the Fed, we've just been dropping like crazy. And today was a tiny bit of reprieve. We actually gained 0.06, so 6 pennies, 0.07%. But that doesn't really change the trend, does it? We're still moving downwards. But more importantly than this is the high yield bonds, otherwise known as junk bonds. And if we look at this junk bond ETF, it has been pulling back and consolidating at its current region. We moved up a tiny bit today, but it's still in this consolidation region. Now, if the junk bonds can move upwards, that's good for stocks. That means there's a risk appetite. That is good for stocks. But if we break down, then that means the appetite for risk is diminishing, and people are probably going to move to even safer assets. So we are going to watch this junk bond ETF very carefully to see whether it breaks up or if it breaks down. If it breaks down, that's another case for the pullback and for us to pause and have some sort of either a minor correction at the very least before we can resume upwards to new all-time highs. Of course, this is all, this is just what the clues are telling us. It doesn't have to happen this way. Again, technically, this is looking very strong and starting to look parabolic. So it could go for 1 or more 2 days, maybe even 3 days at this rate and go parabolic upwards before any of the other things that we said exert enough force for it to actually come down. So we're not saying that it'll come straight down tomorrow, but we're just saying that any upside is going to be limited and probably not to be trusted. We just want to be very, very careful here. So this is a good time in your portfolios to be neutral to slightly bullish, but I wouldn't be full on bullish just yet because we hit an all-time high. There's a lot of things underlying the market that are making us wary and skeptical. So another thing we want to look at real fast is the momentum. So let's open that up. Whoa. Barcharts.com. Is that the wrong? There we go. Barchart.com. So if we go over here to stocks and we look at our market momentum. No, market momentum. Then we can see all the stocks in the New York Stock Exchange that are trading at $2 or more and have been trading for at least 6 months. And what we see here is that this moving average, the number of stocks above the moving average, have been quite steady. It hasn't really moved that much. It moved a tiny bit, but not really that much. So until I can get more participation in the overall markets, we're not going to get too excited about a huge upside move. We can still move higher, but it's not going to be screaming higher. It's not going to jump from 584 to 620 overnight. It's going to proceed in a more stable and steady fashion. So everything that I've seen so far is making it unlikely that we are going to at least have a supercharge forward and upward, but more likely that we're going to pause or pull back until we have finished a consolidation before we choose a direction and either move upwards or come back down. So we just want to be very careful with our positions, our position size, and the exact instruments that we're allocating to. Okay, so just want to make you aware of all of this, especially that high yield bonds. I think I showed you J and K earlier. Same thing. They're both high yield corporate bond ETFs. So here we have HYG, which is the high yield corporate bond ETF, and Spider SPYDR JNK, the high yield bond ETF. So basically measuring the same thing. And as you can see that their graphs are very, very similar. And in any case, that is in a consolidation, and we want to see if that's going to break up or break down. And also the CPC indicator, which we used last week to some very great effect, is starting to tell us that we need to be careful of any upside. So we'll see what tomorrow brings, but I would limit my exposure to the upside for now until this plays itself out. And then when we see the S&P 500 make some sort of correction then bounce, that would be our high probability entry. Right now would be a lower probability entry, especially if we get a pullback. If we're anticipating a pullback, then it's definitely a lower probability entry, and we may end up holding it longer than we had originally intended. Okay, that is about it for today. There's a whole bunch of earnings coming out starting tomorrow. We're starting to hit earnings season. There's a few reports, but let me just make sure there's nothing that we really need to pay attention to. And tomorrow, nothing super significant. Wednesday, imports, exports. This time, not as important as it was a little bit before. And then Thursday, we've got jobless claims, retail sales, Fed manufacturing index. It's very similar to what we had last week, but these tend to be more specific reports, and some of these will be followed fairly closely. And then we have the housing starts and permits on Friday. So it does look like all of our news is more clustered towards the end of the week, and there's nothing huge or earth-shattering that is happening this week anyways. So given that there's not a lot of these forces pushing this around, this type of action could easily break to the downside. And again, that would be very good for our thesis around the S&P 500 and out of all the on any of the trades that we've been taking. So take a look for yourself, decide for yourself whether you agree that it seems like the upside is limited, and then you can position yourself to take advantage of what you believe is the higher probability scenario. That's it for today. Hope you guys have a wonderful rest of your night, and I will see you tomorrow also in a recording, because I will still be traveling at that point and I won't be able to join at the normally scheduled time. So have a wonderful night, and I will see you all tomorrow.